All right, welcome out traders to this week's weekly market recap. Looking at the start of the week, today is Sunday, April 30th. This is going to be for the week starting Monday, the 1st of May. Looking at the S&P, we have had some pretty wild, choppy action here. Not a very clean chart, to say the least, on the daily chart here. We ended up breaking down two big momentum candles down, two power candles back up. Now we've run a decent amount off of that support level down below by the 50 period moving average, back right up into the breakout channel at 4,200 that we've been talking about for a number of weeks. If we push this out to the weekly chart, talking about that, you can see that actually this is a really nice looking breakout setup at 4,200 that just continues to clean up and continues to look better and better as time goes on. However, on the daily chart, this big wicked candle from last week that corresponds to this sell-off and then rebound just kind of dirtied the chart up a little bit. So I would ideally love to see a few days here holding underneath that 4,200 level and between its moving averages here, the 9 EMA and the 20 SMA, kind of pressing up into that before a breakout. We will see what happens. We are going into one more week of really heavy earnings, although a lot of the big players that tend to be the biggest market movers have already gone. A lot of the tech companies, Apple is coming up still in a day or two. But other than that, Microsoft and Amazon and Google, all of those types of companies have reported by this point, and they moved the market. They contributed to this move up over the last couple of days of last week. So anyways, still looking at that 4,200 breakout, still definitely a potential play there, but ideally we would like to see this chop sideways and clean up from this volatility a little bit before that actually breaks. If we go into the NASDAQ, very, very similar pattern. I actually like the NASDAQ more just simply because the strength in the market has continued to be in tech. Tech has been leading ever since the beginning of the year, basically, and I don't see that changing anytime soon. If we put this out on a weekly, you'll see a very, very similar setup to that of the S&P. And we are basically looking for a break of somewhere around 13,000, let's say 350. So that'll be the break point for another move higher. Looking to come up and target the 13,740 previous resistance from back in August of last year was the last time we were there. So still a really good setup there. Again, on the daily chart, just like the S&P, we've run kind of hot into it after that initial sell-off from earlier last week and then the previous week. So ideally, we would love to see this chop. We don't always get what we want as traders, but we can always ask for what we want. So let's see how this shapes up going into the week. Going down to the Russell. The Russell still is the weakest part of the entire market. So the small caps are struggling. Putting this out to a weekly chart, you can see it's below all of its moving averages here. It is holding support around 1,700, but it has a lot of work to do before I'm going to be very interested in anything here. Once it gets back up above about 1,800 or 1,850, somewhere in there, we should see some kind of continued chop basically between the lows here of 1,700 and up to 2,000 until one of those directions breaks one way or the other. There could be selective trades in this area, but I'm not particularly interested in many of them until we get this chart to clean up. So just kind of looking at that, but not interested in it really. We like to trade where strength is and not where weakness lies in the market. And like I said, the Russell has a ton of weakness overall in the broad market. Looking at the Dow Jones just real quick, nothing really to see here. Even though we have a little bit of a high base here from the last few weeks, just like we do on the NASDAQ and the S&P 500, there's not a trade here. There's a ton of chop and a ton of resistance just barely above. We have diagonal resistance, horizontal resistance, both of which are going to kind of try to hold this down. I don't see this being a place that there is enough reward to risk to justify a trade right now. If we put it on the daily chart, again, yeah, we have kind of the little breakout channel just like we do in the S&P. Unlike the S&P and NASDAQ, we don't really have any room to run. We have diagonal resistance directly above us, and then a number of little wicks and pivot points up here at varying levels that just don't inspire confidence to the upside right now. So for me, I'm going to be trading in the S&P 500 and in tech through the NASDAQ. If we go to Bitcoin, checking out Bitcoin really quick, continuing to get a little bit more consolidation here after the rally from last week. We are holding above the 20 and the 9 again, so we did recover the moving averages here on the daily chart. That is a bullish sign. RSI has room to run if it does decide to go. The MACD is interesting because actually we are getting divergence on the daily chart and convergence on the daily chart. So divergence is showing we have higher highs being set over time here, but at the same time we have slightly lower highs being set on the MACD. So that's the divergence. The convergence, confirming we have higher lows over time, and then higher lows over time on the MACD. So the higher lows are confirming continued uptrend. The lower highs are signaling, hey, there might be pause and some hesitation here. So it's going to be interesting to see how this shapes up. If we put this out on a weekly chart as well, and let me get rid of those lines I just drawn to clean that up a little bit. It's not doing anything wrong. It's above its 9 EMA on the weekly. It's above all of its moving averages on the weekly. The 50 period is finally starting to look like it's bottoming out. And usually when we get the 50 period moving average smoothing out and starting to kind of smirk at us a little bit, that is usually a very good sign. So in terms of overall thesis, I do think we are going to see continued appreciation throughout the year. On short-term thesis, it's anybody's guess. I have a hard time believing that it's going to break down below its 50-period moving average here and hold. We might get a little bit of a spike down below it in volatility if the market overall has more volatility coming in this week. We do have a ton of news events this week that I will get to at the end of this video. So it's not out of the realm of possibility to have some significant movements in one way or the other on Bitcoin or any of the other assets that you might be trading. If we go out to crude light real quick, really gross chart, basically nothing to see here. We're underneath moving averages in a short term daily downtrend. Overall, somewhat constructive on the weekly chart, but this actually looks to me like it is wanting to break down again. You can see that it, ever since the futures opened here today, about 3.5 hours ago, it is back below its weekly moving averages and looks like it has some room to the downside. I'm not going to be doing anything in the oil space this week, so just kind of watching that. Going out to gold, we can never look at the gold chart without looking at the US dollar, but right now in gold, there's nothing to see here. I mean, we've had a huge run this year. So it's not surprising to see, basically since the start of the year here, that we've had some pretty significant gains. It's not surprising to see that chop consolidate. I wouldn't be really surprised, honestly, to see this to continue to consolidate and eventually let this 50-period moving average catch up. But looking out to UUP, which is our US dollar instrument that we're going to be looking at, this could really go either way. We've had a couple of fake out breakdowns, right here. This was kind of the breakout line. And we did fake out. We went down below it, popped right back up. This came down and tested the same level, popped right back up. I'm not really going to have a strong opinion of this one way or the other until we see it break out first of the 2786 range to kind of clear this consolidation zone, and second above 28 for actual confirmation of a new trend setting in. If we do see movement to the downside, anything that stays above diagonal support here, I'm going to just kind of call noise. So I'll be looking for a breakdown below the diagonal support here for potential downward movement, which would benefit gold. Now going out to natural gas really quick. So, pardon all of the drawings on this. I've been doing some analysis on natural gas's bottoming pattern here, and you can see that we've had this long, drawn out bottoming pattern. We're finally getting the moving averages to curl higher, and I am actually really interested in this as a potential play. For those that want a stock associated with it, UNG is the natural gas ETF fund. So, looking at a 1 year chart here and zooming in a little bit, I'm liking this bottoming pattern. I would like it more once it gets back above and closes above its 50-period moving average, which is currently at $7.59. So, a break above that would be interesting to me to play as a stock play for UNG, just to highlight that one. And it has just been brutalized. I mean, over the last, what is that, 36 weeks or so, we have seen it go from $34.50 all the way down to $7, which is the current price. So just absolutely massacred. Obviously, there's some room for this to recover eventually, but we do need to wait for that trend to confirm for us. In terms of indexes, last one or two that I want to look at, just to highlight, palladium futures, we had a really nice bullish pop here. It is consolidated back. If we get a break back above the highs of these last four candles, somewhere right around 1530, I'm going to consider that to be a pretty good bullish setup. So I have a couple of alerts set here to let me know if it breaks above 1530, looking to play in that space. And then platinum futures just went on a tear the last couple of months, taking some time off. We need to wait and see where the bottom of this pullback is, because you can see even after big strength, this thing can and does sell off drastically. So we need to wait for a bottoming pattern here. Don't be a hero. Don't jump in too soon. Wait for that secondary pattern to finish itself up. Finally, to close out the video here, just highlighting from Forex Factory again, this is all of the high importance information that we are going to have coming at us in terms of economic data this week. We have a ton of economic information coming in here for us. We have FOMC statement and press conference. We have job openings, ISM manufacturing data. So a lot of information. Unemployment claims coming out. So this week is not going to be dull. I'm expecting a lot of volatility to come in. So anyways, guys, trade safe this week. Like always, use your stops, use your head. Let me know if you have any questions. I'm here to help.